Good afternoon and welcome to the annual general meeting of the company. My name's Richard Glover, I'm chairman of the board, and it's now just after noon, and so the appointed time for our AGM. First, I'd like to introduce my board colleagues. We have with us Anne Beresford, we have Richard Wilson, John Carr, and also Nita Patel, who joined the board on the 1st of July 2002. So this is Nita's first AGM, and I'm sure you'll join me in welcoming her. You'll have read in the annual report that John Carr will retire from the board at the conclusion of this meeting. And on behalf of the board, I would really like to thank John for his contribution and professionalism over such a long period in which he has served as a director of the company. We are really going to miss his extraordinary mix of skills which he displays during board meetings. And on a personal note, I would just like to say how much I have appreciated in the 5 years that I've worked with John, his expertise, his wisdom, his ready source of advice, and above all, his friendship. And it's very good news that John will be a shareholder and we'll continue to see him on a regular basis. Also present is Will Fraser-Allen, Managing Partner of Albion Capital, the company's investment manager, and he will give a presentation of the results of the company for the year ended 31st of March 22. The quorum of the AGM is 2 members. This has been met, and I therefore declare the meeting open. The notice convening the meeting has been in your hands for the statutory period, so I'll take that notice as read. Due to the success of last year's webcast meeting, and in order to maximise the engagement of all members, the board have acquired the services of Lumi to broadcast this year's AGM, which enables members to participate fully in the meeting, which includes interacting during a question and answer session, as well as voting on the proposed resolutions. Now, before we move on to Will's presentation, there are a few procedural issues just to clear up. The resolutions will all be voted on by way of a poll, taking into consideration votes already received by proxy that have been verified by the registrar. If you've already completed and submitted a proxy prior to the meeting, you don't need to vote again on the poll unless you wish to change your vote. So I now declare the poll open. The list of resolutions will automatically appear on your screen, and you have 3 options for each resolution. You can vote for the resolution, you can vote against the resolution, or you can withhold your vote. So please select the option that corresponds with how you wish to vote. Once you've selected your vote, the option will change colour, and a confirmation message will appear to indicate that your vote has been cast and received. There isn't a submit button, and to vote on all resolutions displayed, just select the vote all option at the top of the screen. If you want to change your vote, reselect your choice, or cancel your vote, so you can select the cancel button. So moving to the main business of the meeting, following the manager's presentation, the directors and the manager are happy to answer questions from members about the presentation or the proposed AGM resolutions as time permits. I'd like to thank those members who've already submitted their questions and queries through the chairman's email address. If you wish to ask questions, please select the messaging icon from within the navigation bar and type your question at the top of the screen. To submit your question, click on the arrow icon to the right of the text box. Depending on the level of questions, there may not be sufficient time to address all those that have been raised during the meeting. However, please be assured that all relevant questions and their corresponding answers will be responded to and posted on the Albion website as appropriate. So I'd now like very much to hand over to Will Fraser-Allen for his presentation. Thank you, Will.
Richard, thank you very much indeed. A big welcome to all our shareholders who are viewing this AGM remotely. So I will be running through a presentation presenting the results for the year end to 31st of March 2022. And if I go on to the next slide, you'll see that I'm going to cover track records, look at the highlights in the year, look at the portfolio, and then run through both investments and realizations. And I'll end by presenting the prospects for the fund for the coming year, and I'll also be presenting the results for the first quarter, which have just been announced to the market. So if I move to the next slide, picking out the key highlights of the year, we've ended the year with a net asset value of 53.38p, which reflected a very large special dividend of 22p that was paid in the year. And shareholders will recall that that special dividend was linked to a substantial sale of a care home portfolio that the company had previously. In terms of the accretion of value in the year, about 5.5p of additional shareholder value was created, which delivered a 7.6% return. So that is above the target yield of around 5%. In terms of the standard dividend, which was in addition to the special dividend I've just talked about, we paid out a total of 3.3p. So moving on to the next slide. Just to give us sort of set context more than anything, I think it's fair to say that COVID did have an impact, but clearly a far smaller impact than previous reporting periods. In a way, the world is sort of moving on from COVID, but these things are like buses. It's now being replaced by other issues, most notably the horrendous Russian invasion of Ukraine and all that is resulting from that. And that's both in geopolitical risk, but it's also macroeconomic risk, which is being borne out by increasing interest rates and really eye-watering inflation. So despite that sort of background, we were able to deliver above target returns, which is good news, but clearly it does temper our expectations going forward. But it is worth saying that when you look at our portfolio, we benefit from both a portfolio that on the technology and healthcare side that focuses on mission critical products and services, but we also benefit from a historic allocation to renewable energy assets. And unsurprisingly, they have benefited both from higher inflation on which their subsidies are based, but also the rising energy prices and the amount they can charge for their electricity. So if we move on to the next slide, we can sort of see how that sort of pans out in terms of short-term and longer-term performance by the track record. So the 7.6% we've talked about, but if you look longer, over a 10-year period, we're running at about 5.8% per annum. Again, that is ahead of the 5% yield. Moving to the next slide, and continuing to sort of focus in on the highlights, we had a strong fundraising in 2022. That came on the back of no fundraising in the previous year, which was because of the substantial realizations from the care homes. And then in terms of exits, rather quieter because the previous year we had the care homes, but we were still able to deliver two exits from the relatively young technology portfolio in the form of Credit Kudos and Phrasing, and I've got some slides on that in a moment. We had a very substantial investment activity period, so investing in six new companies to the tune of 3.2 million and a further 4.6 million into the existing portfolio. And that is very much a theme of the type of investing we are now doing, that we're looking to invest in companies early in a relatively modest way, but then supporting those companies through further follow-on fundings. And that's how we support those companies as they scale, grow, and create shareholder value. Share buybacks exactly the same year on year, reflecting a loyal shareholder base, for which thank you. Dividends are linked very much to the special dividend, which is why it's so substantially higher than the previous year. So if we move to the next slide, and we break down the actual increase in shareholder value in the year, that's to put a bit of flesh on that, we had some 2.4 million of uplift from the sale of Credit Kudos, and then we had some valuation uplifts. So this is where companies in our portfolios have raised substantial rounds from external investors in which we have participated, and Speechmatics and Elliptic being the two examples, generating an aggregate of 1.7 million. And then really to look at under the bonnets of the rest of the portfolio, you'll see that there's a lot of companies that have gone up, but also there are a number that have gone down. And if you want to go into the detail of those, the annual report accounts gives you the full detail, but it's spread across lots of companies. It's not any particular major ones. So turning to the next slide. It's worth sort of stepping back and sort of looking at how the portfolio is developing, and bear in mind that we have moved this portfolio from very asset-based, lots of care homes and the like, and then reinvesting those proceeds over time under the new investment strategy that came in a few years ago, which is to invest in young, innovative, mostly technology and healthcare companies. And what you'll see there is that we've made some good inroads now into building up the software portfolio. So that's now some 23% of the portfolio. And then renewable energy assets are sitting there at 16%. And our strategy very much is to hold on to those renewable energy assets, providing stable income as we reinvest the other cash that we hold into growth investments such as healthcare at the bottom, alongside software. And what do we have? Well, effectively, we're now backing 38 companies through this BCT, and that's really importantly, that's employing now some 1,800 people, and most of those are in the UK. Turning to the next slide. I'm breaking that portfolio down, and this is a slide that's designed to give a sense of what sort of stage companies we're investing in. The principle being that young small companies are going to be higher volatile than the more mature ones, and it's our job to invest in the early stage and then to back those until they become larger companies through scaling up, and we're making good progress there. So by value of the portfolio, some 48% of the portfolio is in companies with revenues over 5 million. That's up from 26% last year. Renewable early stage is now sitting at around 15%. There's no specific target there. It's really more of a sense that we are effectively seeding the future companies in the portfolio. But then if we look at employees, that sort of confirms the picture that you've got, you've got 24% with companies over 100 employees and only 7% with under 20 employees. So what you've got is a maturing portfolio, and this is what it's all about. We fairly substantially changed the investment strategy not that long ago. So it's all about how we have invested that money into companies that grow over time. So turning to the next slide. Looking at the top 3 companies in your portfolio, so this is about 15.4% of NAV. The reality is that as we back companies that get significantly larger, those companies that do particularly well will become a larger feature of the portfolio. So shareholders should expect, as companies are successful, that there will be greater concentration amongst those that are going to create the most value through their growth. But as we stand here today, we've got our largest investment is in a hydro scheme, so that reflects that we still have some legacy asset-based portfolio, but clearly much lower than previous as we reinvested, and that's Green Highland Energy. So this is a hydro scheme, 2 megawatt hydro scheme in the Scottish Highlands called Shonay. It's able to generate sufficient electricity to power about 2,000 homes. It's fully operational, has been for a number of years, and very much in the income generation phase of its development. But remember that we developed that from a greenfield site. The next 2 are both within our technology portfolio. So Speechmatics is a speech recognition business. So it's turning speech and turning it into text. It's able to translate any language that you ask for it. It's able to learn languages very fast rate, and because it's converting it into text, it can be deployed on devices. It's able to be used in a wide variety of use cases. So very accurate, very deployable, very usable speech recognition and transcription into text. And then Elliptic, which is number 3, is our company that is supporting crypto assets, particularly around money laundering. So what we're seeing is the whole area of crypto assets, albeit a very volatile sector, is becoming very substantial, and many institutions, financial institutions, are now providing crypto asset services to their customers, and they need a higher degree of understanding of potential financial crime. And Elliptic provides that platform of assessing crypto assets and establishing any that may be connected to bad operators. So very particularly topical, growing very fast. You can see that by both Speech Masters and Elliptics have grown their revenues by over 3 times, and they're both substantially growing their employees. So three good top companies within your portfolio. Take to the next slide. These are some examples of the sorts of new investments we're doing, and I will sort of briefly summarize a few of them rather than go into the detail. I've got a more detailed slide on Gravity and Nouveau Air in a second. PurchasePeak is a platform to help companies with their relocation of their employees. So these are big global companies that have a very mobile workforce, and this helps them relocate across, usually from country to country, but actually also in the US from state to state. Bright Light is using GPUs, graphic processing units, to run very high-speed databases, for example, used by mobile phone operators. And then I'll come on to a couple of the others in a moment. So if we move to the next slide, this is Nouveau Air. So this very much falls into our healthcare focus, specifically health tech. What Nouveau Air is, it's providing a platform for the treatment of respiratory conditions. So, for example, asthma, cystic fibrosis, and that's really used in 2 ways. It's used by clinicians to be able to treat their patients in a remote from the clinic. So hugely important in COVID, but very much a trend that has continued. And this effectively is a platform that is attached to a spirometer, which the patient will have in their hand, and that measures airflow from the lungs and enables the clinicians to assess their patients. But it's also used in clinical trials for respiratory drugs, where they're able to monitor the progress of those trials remotely. So we invested 3.6 million across the Albion VCTs, and this is all about an expansion from where it currently operates in the UK into the US and Europe. So very much to the theme of the digitalization and provision of healthcare. Next slide, please. And Gravity was another investment very much in our enterprise software segment. So this is allowing companies to manage their application programming interfaces, so APIs. So that's the sort of glue that fits all the bits of software together. It's the link that allows an IT infrastructure to have multiple software all working in harmony. And Gravity.io has produced a new generation way of managing what can be very complex, particularly in keeping these links up to date, working. And that this company is doing well. It's growing nicely. We invested just under half of an 8.8 million round. So our money being facilitating a bigger round. And again, very much a theme for many of our companies. It's looking at how the company could expand into the US, as well as selling in the UK and Europe as they do currently. Next slide, please. But follow-ons are hugely important. So this is where we invest further money to help companies grow. And we've backed our portfolio significantly into companies like Seldon, which is our machine learning models platform, into Transfic, which is our fintech business, which connects financial institutions with various trading venues, e.g. fixed income trading venues, and then Elliptic, which we have discussed. Next slide, please. Exits are important. I mean, exits provide the effectively the cash to pay our dividends. So we were delighted to sell Credit Kudos in the year. And this is unusual in the sense we were only invested for 2 years. It sold to one of the very, very largest global technologies that you would all know well, but whose identity I must keep confidential. But it was one of the very, very largest companies. And this was our new type automated credit bureau. So very, very good return in a very short period of time, 5.2 times. And the return to Albion Venture Capital Trust was 3 million, which coincidentally was the same as the total amount invested by Albion VCTs. But AAVC's return was some 5.2 times, so really good return in a very short period of time, representing the opportunity when you can invest in highly strategic pieces of technology that some of the very largest global players wish to acquire for their own technology portfolios. Next slide, please. And then Phrasey was sold to a private equity-backed business. This was our marketing software business, which helps companies develop content and effectively for their online marketing, particularly emails. So it's all about optimizing the language used in emails using AI to do so. That business we were in for about 3.5 years. Again, not a particularly long period of time, but its business grew well during our involvement. And again, we delivered over 3 times our cost and proceeds of 1.7 million to Albion Venture Capital Trust. Next slide, please. Quick reminder of our strategy. We are very much early stage investors, so we are looking to invest in what we call sort of seed and late seed. So this is relatively young companies, and then we're backing them progressively across the various their growth stages till they become significant. And it's all about backing what do we believe are long-term trends, and that's B2B software, and then also particularly where that interacts with healthcare and other health technology. Next slide, please. ESG, critically important globally. It's very much plays to where Albion has always positioned itself as believing that we should be backing companies that have positive societal and environmental impact. That's been very much at the forefront of our approach generally, but what the current focus on the ESG does is it creates a framework under which we operate, so the UN PRI in particular. And this is all about developing sustainable long-term business, which in turn will generate superior shareholder returns. So we've been working very hard to integrate the principles of ESG into our investment process. And if I go on to the next slide to give a bit of colour to that, that's very much, obviously when we initially look at companies to make sure that those companies meet our view as what is an appropriate company in line with our ESG strategy. But beyond that, it's about understanding through due diligence where these companies are on their ESG journey, and then developing a plan with them as to how they can move their strategy forward under our involvement. And that's done because we're in a privileged position, usually often having board seats, but also board participation and helping these companies in their ESG journey, because it's important both from creating sustainable business, and it's the right thing to do, but it's also important because these companies in turn will be selling and will be exiting, and when they exit, we want them to go to companies which themselves have highly developed ESG strategies, and we'll be looking to the companies they acquire to have that ESG rigor in place. So it's really a process right from when we first hear about a business right the way through to when we sell. And moving on to the next slide, we're very keen to do as we preach. So within Albion itself, we're working really hard. We've got lots still to do, but we're looking at our own carbon footprint, how we can get to net zero eventually, but in the meantime, how we can offset our carbon usage through biochar carbon removals. That's in very simple terms. That's using a charcoal that has absorbed large amounts of carbon and helping fund that biochar process. And we're doing our bit more broadly around diversity and inclusion. So we're working with outfits like Future VC to try and bring people into the VC industry that wouldn't previously have considered it. So we're providing internships for those types of people that we very much want to bring on. And indeed, our first intern, we've now offered a full-time job to, which is fantastic. And then we use technology. We use Fair HQ, which is a software platform backed by some consultancy, to look at how we can do better as Albion, particularly around areas like diversity and inclusion. So making a more diverse investment team, more diverse business generally, and a business that is more inclusive in its interaction with those that work for us. But it goes beyond that. It's also looking at how we back founders that come from more diverse backgrounds. So very specifically, far too few female founders are backed generally, and this needs to change. This is well identified. So we are signatories to the Investing in Women Code, which is a government-backed scheme that provides a framework for encouraging and measuring how we are supporting women founders, and we extend that to women-led businesses too. So big focus on this. It's important. It's something our boards are very keen to understand our approach. So we have regular updates to our boards, and it's absolutely ingrained in our investment process, as I outlined on the previous slide. So lots going on, lots more to do, and we'll continue to report against our ambition. Next slide, please. So where's the world going? I mean, clearly we are in pretty uncertain times, and that's sort of every way you look at it, whether it's the difficulties in Ukraine, whether it's rising inflations. Clearly we are in a tougher environment than the previous number of years. But I think we have designed our portfolio with this eventuality potentially in mind at some stage. So our portfolio is well balanced in terms of the more maturity of it, and also sectors and subsectors. We do benefit from some resilience from our renewable energy and other asset-based assets. And what we must do is focus on companies that provide mission-critical products and services. And we do focus very much on the enterprise, business to business. So this is businesses that need the software and therefore will buy it and will continue to buy it. And most importantly, and I think a big driver, is the fact that we have by design, we have very limited exposure to the consumer in terms of their discretionary spend. And that is important because the consumer is going to be particularly hit by the world that's unfolding around us. I think very much on the positive side, what we're seeing is opportunity, and there's lots of evidence from previous downturns that some of the best venture investments are made when the economy is having a tougher time, and that's because there's more opportunities come our way. There is more talent available, and we're seeing this being borne out. So our investment rate, even in the last quarter, has increased substantially, and the opportunities coming across our desk has also expanded. I think what would be fair to say is that I'm expecting rather less M&A activity. So exits will slow down until life gets easier. So reasons to feel optimistic, but also reasons to be cautious in our outlook. And if I now sort of turn to our first quarter results, so this is to June on the next slide, I think some of what I'm saying is borne out. So if we go to the next slide. We've just announced our quarterly results, so the NAV is now 53.79p, a small increase of 0.8%, which I think is encouraging given the environment we're in. As I suspected, no exits, but at least the portfolio moved forward, which I think is testament to the strength of the portfolio and the construct of that portfolio that I've just articulated on the previous slide. So a couple of things just that I wanted just to bring to your attention. We are finding these virtual AGMs a very effective way of communicating with shareholders, both those that dial in, but what we're seeing is a very large number of people that choose to access the recordings in their own good time. And this just very much reflects that we have a very broad shareholder base, so many of whom aren't able to attend AGMs during the working day. So we are seeing hundreds of people subsequently watching the AGMs. So we know that they do derive good engagement, and the ability through Lumi to provide live voting for those who want to attend, I think is a great addition. But we don't, we also very much want to see physical interaction with our shareholders. It's great for us as the manager and for the boards as directors to get feedback and really understand the motivations and drivers behind our shareholders. So with that in mind, we're very much looking forward to our annual shareholder seminar. We're doing it on a bigger scale this year. It's on the 23rd of November. It's going to be held at the Royal College of Surgeons, which is in Lincoln's Inn Fields. We're hoping to have a really good turnout, and already we're getting some great sign-ups for it. So please, I'd love many of you to join us. Please do reserve a place as soon as you can, and that's info@albion.capital, as inevitably the number of places are limited. So please sign up as soon as you can, and I know the board and I are very much looking forward to seeing people in person at that event. And of course, John Carr, what can I add to all that Richard Glover said in his opening remarks? I echo everything said 100%. John has been such a big part of both of this company for so many years. Has done so much. He's been a huge supporter of what we do at Albion. He's been able to both be supportive, but also bringing that support alongside constructive, well articulated and balanced challenge. His chairing of the audit committee, I think, has been both thorough, very effective, and that added huge value both to the company and to Albion. He will be very much missed by all of us. It's been somebody I've really enjoyed working with, and also I share the board's desire to wish John a great retirement, and very much looking forward to welcoming John back to shareholder events and keeping in touch. John, a massive thank you from Albion. You've been a legend over a great many years, so thank you. And on that note, I hand back to Richard, who will run the Q&A.
Well, thank you very much, Will. That was, as ever, extremely interesting. I hope comprehensive, and gave a very good overview of how things are within Albion. So it's now time to look at some of the questions that have been received via the Lumi platform. First one we have is a request for some background as to why this company hasn't done as well as other Albion VCTs. Will, you're probably in the best position to look across the whole Albion stable. Do you want to make some comments in response to that question?
Yes, absolutely. And I'm going to take that question as referring to the last 12 months, which I suspect it's aimed at. So that'll be on the back of seeing one of the other Albion funds reporting, but it's really, if you more than a year, it's sort of more like a three to 5 year view, and it really comes back to where this VCT came from. So if you go back in history, this VCT was purely asset based. So it was doing schools, it was doing hotels, it was doing renewable energy, and it didn't have any exposure whatsoever to growth, to more the sort of healthcare and technology elements of our strategy until about 2017, whereas many of the other funds were throughout for over a decade have been investing in those strategies. And the biggest driver of the difference in performance is the difference exposure to some very high growth and maturing technology businesses that have driven quite considerable growth in other funds. And those of you that are shareholders will recognise names like Quantexa, Egress and Pravica. So these are all investments that were made within the Albion stable before this fund had a strategy. So a big chunk of this is the lack of exposure from Albion Venture Capital Trust to those particularly strong performing assets. There's a lot of other sort of smaller contributions, but the biggest is simply that this translation to a technology strategy is more recent, therefore the portfolio is less mature. But what I hope you've gathered from today's thing is that actually there's a number of companies coming through in your portfolio, which is about driving the future performance under this new strategy.
Excellent. Thank you, Will. And shareholders who attend regularly will have noticed the progression that has been taking place as our strategy has moved. So we have another question about, is there any reason why this AGM couldn't have been held as a hybrid so that shareholders could attend in person? And I think Will did touch on this. The answer is that it could indeed be held as a hybrid. The board's view is generally, as far as possible, we want to increase shareholder participation. We want to maximise both synchronous and asynchronous participation, which we have certainly been able to do by using the virtual platform. But we are open to change, and in that respect, if there are other views that shareholders have that they want to register with us about future shareholder meetings, then we're certainly open to that. Will, I don't know if you have anything.
Yeah, thank you, Richard. So indeed, we have the ability to run a hybrid event. I mean, it is somewhat more complex, which is an important consideration. So we did hold a hybrid AGM for one of our other VCTs where there was a special, well, it was a general meeting at the same time, and it was interesting. This was quite recently, so we actually only had five shareholders to turn up, and actually, the people who actually engaged were the many hundreds that then dialed in. So actually, I think the sort of dynamics have changed. So even though there was a physical ability to attend, in that particular case, we only had 5 shareholders. So the complexity of running a hybrid scheme, a hybrid AGM, is not to be understated, and clearly comes with a substantial cost. So I think on balance, given the relatively low attendance and given how effective these have been on a purely virtual basis, and in the context of a substantial shareholder event, the board, I think, is of the view that this is the right balance between engagement and effective cost.
Absolutely, but as you say, Will, we are always open to ideas about this, and shareholder engagement is the key in this respect. We have another question here, which you partly, I think, touched on when you were talking about prospects. Will, does a more challenging market present opportunities?
I think the answer is undoubtedly yes, and sort of just to sort of add some colour to my thoughts in my presentation. I think you get a number of things happening in a more difficult situation. I think talent is a big one. So in years running up to now, it's been extremely difficult to source talent in a very busy market. I think what happens now is you will see people being laid off. These are very talented people, so you can recruit the talent that's so important to what we do. And I think the other feature we've seen in previous recessions or economic downturns is that you get a number of people being let go by some of the large corporates who come out and set up their own businesses and indeed join young companies. So you've got, I think, talent is a big part of it. I think the other element you get is, as the whole point of VCTs is that there is a limited amount of capital available to small companies. That's why the scheme exists, why the tax break exists. Like that only gets worse in a downturn. So you see less capital available. So therefore, those to have capital available means that you have more opportunities, and we're already seeing that. And that's really why the VCT scheme is so important to UK SME, because it's providing capital to those companies who might otherwise not be able to back their business plans, and we've been doing it for some 20-25 years now.
Very good, thank you, Will. One final question that's come through here. In years gone by, you've had hassles with HMRC getting sign-off on the tax eligibility of an investment. what's the current situation with HMRC, we're asked.
Right. Okay. That's quite a technical question. So, just for those shareholders who perhaps haven't got as much, haven't been into quite as much details as others, there is a requirement that every investment we make fulfills the rules of the scheme. So, effectively, we are under an obligation as the manager to make sure that we invest in companies that meet all the quite complicated rules that VCT is operating, and it's because we maintain those rules that shareholders maintain their tax-free status for income in particular. So what that means is we're very, very mindful that we fulfill the roles, meet the rules. And that's been historically, and I think what this question is alluding to, we used to have a system where every single investment had to be run through HMRC. And frankly, it became a very major exercise for HMRC to sign off every single investment. And they simply didn't have the capacity. And what happened as a result of that was that HMRC said, look, rather than trying to add more and more people to HMRC, you guys understand what you're doing. There's now a very developed advisory network. So this is typically tax accountants who know the rules very well. And we flipped a number of years ago now to self-assurance, which is where we seek advice and are given advice from tax professionals, confirming our view that those companies are qualifying. And as a result, that's largely, not completely, but it's largely taken away the need to run every single company past HMRC because we have an alternative. And as a result of that, the situation is immeasurably better. And it was an extremely good initiative of HMRC. It's worked very well now for a number of years. And now only very, very specific and perhaps more difficult ones to opine on might go to HMRC. So to reassure you, to the shareholder raise a question, it's very, very much a problem of the past. And we're now operating very well under a new regime that allows us to deploy money in a sensible time frame.
Very good, encouraging. Thank you, Will, for that. Well, we don't have any more questions coming through at the moment, which means that we're now going to continue with the formal business of the AGM. The full text of each of the resolutions was set out in the notice of the meeting, and the board is recommending members to vote in favour of all the resolutions. So let me briefly summarise them. The first resolution is to receive and adopt the company's accounts for the year ending 31st of March 22, together with the strategic report and the reports of the directors and auditor. Second resolution is to approve the directors' remuneration for the year ended March the 31st, 2022. The third resolution is my own re-election as a director of the company. The fourth resolution is the re-election of Anne Beresford as a director of the company. The fifth resolution is the re-election of Richard Wilson as a director of the company. The sixth resolution is the reappointment of BDO LLP as auditor of the company to hold office from the conclusion of the meeting to the conclusion of the next meeting at which accounts are laid. Seventh resolution is to authorise directors to agree the auditor's remuneration. The eighth resolution is to allow the directors to allot shares. The penultimate resolution is a special resolution that will give the directors the power to disapply preemption rights. And the final resolution, which again is a special resolution, is to authorise the company to make one or more market purchases of ordinary shares in the capital of the company. The results of the voting, including the proxy votes on each of the resolutions, will be announced after the meeting through a regulatory information service and published on Albion Capital's website as soon as reasonably practical. For those members that have cast their vote, I can confirm that the poll has now concluded, and therefore the poll I declare to be closed. In the meantime, I will show on the screen the current proxy votes that have been received by the registrar, and you'll note that the proxy votes are comfortably in favour of all those resolutions. So, thank you. That concludes the formal business of the AGM. I would like to thank all members who joined this webcast for the AGM. As I mentioned earlier, the board does welcome any feedback you may have, which you can do by sending an email to aabcchair@albion.capital. For those of you who are interested in seeing the list of questions and their corresponding answers, these should be available shortly, along with a recording of the AGM on the Albion Capital website. So there being no further business, I declare this meeting closed and wish you all a very healthy and happy remainder of the summer. Thank you all very much for attending.